Shut up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real options trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open and ready to go so you can follow along. Set your YouTube video quality as high as possible. It helps to read the numbers a whole lot easier. Have a calculator ready so we can do some easy math. And finally, remember, this is not financial advice. This is all for entertainment purposes only. All right, let's look at our open positions right now. DraftKings, we shorted a call vertical spread. We'll go over that one in a minute. SPY, we opened this yesterday. This should fill any second now, as long as the market keeps moving down, which it probably will. So we'll keep an eye on this one. Gold, this one on the other hand, has moved against us a bit. So we'll keep it up. This is November expiration, so we've got plenty of time for this one. Same thing with XOP, November expiration. It's come back a lot today, so we're doing okay on that one. Macy's, same thing, up $34 already. Coca-Cola, flat on Coca-Cola. We opened at 32. Mark is now 30. We've got earnings next week for Coca-Cola. And Roku, down a bit, but same thing. We've got till November expiration. I think we're about 28 or 29 days out till November expiration, okay? Let's go over DraftKings really quick. So we sorted the 34-39 call spread. Let's pull it up. DKNG. Down again today. So when it moves down, our call spread that we're short gets filled. We risked $500 to make $26. So we'll take 26 divided by 500. We made a 5.2% return on our money. Okay? So risking $500 to make 26, 5.2% return in a couple of weeks. I can't remember when we opened this one. I think somewhere around here, early October. So about over the course of a week or two, made 5.2% return. That's not bad. Don't forget that the average return for the S&P for the entire year is about 9% or so averaged out. All right, and if you hold your money in bonds right now, same thing, 5% for the entire year. We just made 5% in a week or two. Cool. All right, let's look for something new. Let's start with Enphase, ENPH. Down big today. Earnings are on the 26th, so that's next week. Too close to earnings, so we're going to hold on this one. We'll wait till after earnings and see what happens, okay? Tesla, down big yesterday, down after earnings, coming up to the 200-day. Might sell something here, actually. Earnings for Tesla are January 24th, so we got plenty of time here. Let's look on the put side. I think we're done with November. Let's take a look at December now. All right, so December expiration, 56 days out. If we sold the 170 and bought the 165 on the put side, what do you get? That's 302 minus 244. Divide that by 2 and divide that by 500. That's almost a 6% return if you sold the put spread. On the call side, if you sold the 260 and bought the 265, that's 382 minus 317 divided by 2 divided by 500, 6.5% on the call side. I'd rather sell the put side though. We could even go to the one. Did I do the 175? Let's do 370 minus 302 divided by 2 divided by 500. If we sold the 175 and bought the 170, we might do that one. Let me make a note of Tesla puts. All right, next up, Solar Edge. SEDG. Down big today. Their earnings are on November 6th, but I think they pre-announced earnings today, and it wasn't good. So, to go all the way down here to catch a bounce, which is where they're at. Let's look at the put side. Not as much liquidity as I thought there'd be. And you have to go all the way out and sell the 60. You have to sell the 60 and buy the 55. Not very liquid though, especially for the 55. So that would be challenging. On the call side, I'd skip the call side. All right. Next, let's look at CSX. Transport Rail. I think this is a post-earnings move. Earnings were yesterday after the close. Here's our chart. Not much movement after earnings. So both the calls and the puts are probably losers. Yeah. Nothing here on the call or the put side. We'll skip this one. Next, AXP, American Express. This is post-earnings as well. If you sold the 125 and bought the 120, it's 114 minus 71 divided by 2 divided by 500. 4.3%, not as good as I thought it'd be. On the call side, if you sold the 160 and bought the 165, that's 94 minus 52. Divide that by 2 and divide that by 500. 4.2% on the call side. So, not great. It should catch some support down maybe here, if not down around 132 or so. Maybe in 134, but might be a little early on that one. Let's go over here really quick. Our SPY call vertical that we sold yesterday. Let's go over that one really quick. So we sold the 450, 455 call. Let's go to SPY really quick. So we sold the 455, the 450, 455, okay? And so that's a $500 spread, and we made $29. So take 29 divided by 500. We got a 5.8% return on our money overnight. That's really, really good, okay? Again, put that in perspective. To get a 5.8% return overnight, what else would you have to do? All right, cool. So 2 fills today. Good job. Let's go back. Let's go to RF. This is a regional bank, I believe. Down 15% today. I believe this is post-earnings. Yes. Yes, today before the market. So now with the big banks are out of the way, we're starting to get the regionals as well. And so what I've been waiting for, especially with the KRE, is waiting for the small banks to report, wait for bad news, and have this big drop like we had in March. We may be starting to get it. Let's look at the put side here. Not a lot of volume. Let's go to the KRE. Down 3% today. So, again, if we can get another big sell-off like we had in March, we'll have to wait for some more regionals to report, and then we'll go then. Right now, if you want to look at something on the put side, sell the 34. Sell the 34 and buy the 30. That's risking $400. That's 60 minus 22 divided by 2 divided by 400. 4.8% on the put side. On the call side, if you sold the 45 and bought the 49, what do you get there? 47 minus 12, divide that by 2 and divide that by 400. Only 4.3% on the call side. So I'd skip the call side. Put side is interesting. I don't know if we're there yet. We got to wait for some more regionals to report. Okay. Next, HBC. Down 3.5% today. Is this earnings? No, earnings are on the 30th. What news do they have? No news. Let's look at the chart. Down in the past 2 days, that's why. So volatility is definitely spiked on this one. It's coming up to the 200-day moving average as well. So let's look at the put side. Not enough liquidity. The spread here is 30-60 cents. No volume. Same thing with the call side. No volume here. Let's look at GM. Some news here about the ending of the auto strike, but I believe earnings are coming up. That's the problem. Earnings are on the 24th. That's early next week. So it's the 20th. 1, 2, 3, 4. Next week, Tuesday, will be earnings. So we'll come back to this one after earnings, see how they did. This will be a fun one to watch, though. Kind of been waiting for the autos to pass earnings and then do something. See if the strike can get resolved. If you sold the 25 and bought the 23 on the put side, 40 minus 20 divided by 2 divided by 200, 5% on the nose there. On the call side, 35, 37. Now, let's skip this one till after earnings, okay? We'll hold on tight. Next, Taiwan Semi, TSM. Earnings are the 19th. That was yesterday, so we're past earnings. That's good. I don't know. Maybe sell the call side. If you sold the 105 and bought the 110, what did you get there? That's 69 minus 29. Divide that by 2 and divide that by 500. Only 4% on the call side. And on the put side, yikes, so sell the 80 and buy the 75. That's 86 minus 49 divided by 2 divided by 500. That's even worse, 3.7% return. So we're looking for something bigger. I'd skip Taiwan Semi for now. Netflix had earnings yesterday. Moved up big yesterday. Continued a little bit of its move up today. Here's our chart. I don't know. I wish it kept moving up before we opened something on the call side. But if you wanted to for December expiration, you don't have to worry about earnings in this one. Sell the 460 and buy the 465. What do you get there? 480 minus 407 divided by 2 divided by 500. 7.3% if you sold the call side. That's very interesting. Volume's okay. We'll keep Netflix on the list here. This contract is up 32 cents today, but the stock is up less than 1%. That's very interesting. On the put side, if you sold the 350 and bought the 345, is that better than 7.3%? That's 457 minus 395. Divide that by 2, divide that by 500, only 6.2%. I'd rather sell the call side anyways. We'll keep an eye on that one. Next, First Solar. That's not the ticker. Here it is. Sorry about that. I don't trade this one very often. Not very liquid, that's why. Wouldn't mind selling the call side on this one. Is there any liquidity? Or when's the earnings, first of all? Earnings are Halloween. That's 11 days out. So that's why we're going to skip this one. All right. Next, HPE. Bad news today. What is it going on? Earnings are November 28th. That's over a month away. Raises, outperform and raises price target. Let's take a look at the chart. Wowzo. Not a good looking chart. All right, on the put side, let's see what we got. No volume, no liquidity. You'd have to sell the 13. 3. No, there's no volume here. I'm surprised. All right. Let's look at the TLT. I know we've been talking about the TLT a lot, waiting for it to get to 82.5, which it did yesterday or today. Didn't quite get there yet. But those that have been following, let's go to the weekly chart really quick. We got to go all the way back to 2007 to get to these lows. So here we are. 82.30 is about the lows back from 2007. This is the 20-year bond ETF. If it breaks down below 80.50, that'd be very interesting. So we're in the range to start selling puts if we want to. For December expiration, you have to sell the 75 and buy the 70. What do you get? Maybe we'll make it tighter. 73 minus 27, divide that by 2, divide that by 500, 4.6% for the bond ETF. On the call side, if you sold the 91 and bought the 96, what do you get there? 64 minus 25 divided by 2 divided by 500. That's even worse. So you'd want to sell the put side and you get paid more for it. So that's great. What was the strike again? 75. Let's take a look at 75 on the chart. $75 is all the way down here. That would be an all-time low for this ETF. That doesn't mean it can't get there by December expiration. It could. But man, I feel like with rates, with the 10-year yielding 5%, bond buyers going to start coming in like crazy. Go back to the daily chart really quick. Let's look at the options chain one more time. We sold the 75 and bought the 73. Is that any better? 73 minus 49 divided by 2 divided by 200. That's 6%. Maybe we'll do that one. It's a tight spread, but you get paid. You're only risking $200 to make 12. You sell a bunch of those. Sell 10 of those contracts if you want. What about the 72? Let's do 73 minus 41, divide that by 2, divide that by 300, 5.3% return. Making $16. We could do 2 of those. All right, let's go ahead, open a position here. $200 spread. So if you got a really small account, this one's great. We'll sell the 75 and buy the 73, okay? We'll go to verticals. So we have 75, 73, December expiration. So we're in December. Change this to 2. We're looking at the 75, 73. So we'll buy one December expiration of 73. That's a put. And we'll sell one December expiration 75 put We'll go for the ask limit credit on this one. We'll preview that. We'll check the ticket here really quick. Buy 173 put and sell 175 put, both to open. You're going to receive a credit of $27. That's important. Make sure you're receiving a credit, not a debit. And we'll send this one out. It'll hang out here, okay? Let's move on. Let's look at Morgan Stanley really quick. This is post earnings. And down again for the third day in a row. It should catch some support here. So now maybe the time to sell puts. Is it worth it? For December expiration, if you sold the 65 and bought the 60, what do you get? 86 minus 38, divide that by 2, divide that by 500, only 4.8%. But this is Morgan Stanley and it's post earnings. It's very liquid. 1 point spread here, 2 point spread here. That's really good. We got red on both sides, red on the call side, red on the put side. We'll keep this one on the list. Next, let's look at NVIDIA. Earnings are on the 21st. We're about 1 month away. Looks like it's moving down again. As the 10-year moves up, these tech stocks are going to get hit hard. On the put side, if you sold the 335 and bought the 330, that's 590 minus 522, divide that by 2 and divide that by 500. It's almost 7% return if you sold that put spread for December. This does include earnings volatility, though. That's why you're getting paid for it. On the call side, if you sold the 500 and bought the 505, that's 882 minus 807, divide that by 2 and divide that by 500, 7.5% return there. Looking at the chart, I have no bias towards the calls or the puts. And the fact that we got earnings coming up, this isn't the best one to make right now. J&J. Never mind, looks like J&J got their bounce already. Post earnings. Let's take a look at the put side though, really quick. If you sold the 140 and bought the 135, is it worth it? 105 minus 60 divided by 2 divided by 500, only 4.5%. We're going to skip this one. All right. We don't have a lot of time, but let's look at our IV rank scanner. And we'll sort by volume. The SPY is now 67% IV rank. That's really good. We had our position close this morning, but if you want to open something new, let's take a look. Here's our chart. I mean, it could get a bounce here off the 200-day. On the put side, for December expiration, if you sold, if you sold the 393 and bought the 388, what do you get? That's 418 minus 357. Divide that by 2 and divide that by 500. 6.1% return. Where's 393 on the chart? $393 is all the way down here. Remember, this is December expiration. We have a lot of earnings to go through still. Doesn't mean it can't get there. Interesting, though. I don't know. I'll hold on this one for today. Getting really close, though. Go back to the chain one more time. 393. $426 minus 361. Divide that by 2. Trying to get $32. Maybe 33. Divide that by 500. 6.5% return. Man, that's good. If we open it, it'll definitely get filled. It's going to be a long weekend, though. A lot could happen. That's why you're getting paid for the risk. Let's go ahead and do it. We'll open up the 393, 388 put spread, okay? We'll do this one together. Go to vertical. And we're going to set the width to 5. December expiration 393, 388. Here we go. So we'll buy one December expiration 388 put. And we'll sell one December expiration 393 put. All right, we'll go for the ask. That's 64. This will, if it keeps moving down, we'll get filled on this one today. Okay, so limit credit 64. We'll preview this. Let's double check everything. December expiration. Buy one 388 put and sell one 393 put. We're going to receive a credit of $64. Okay, make sure you're receiving a credit, not a debit. Go ahead and send that out, and this will hang tight here all day. So if SPY gets filled, we will set a buy to close order limit at 32 cents, and we'll set that as good till canceled. So they'll hang out here with the rest of these till they get filled. And with the TLT, if this one gets filled at 27, we'll set a buy to close order, good till canceled, for 13 cents. Okay, limit, and that'll hang out here until it gets filled. Okay, so if these two get filled, great. If not, that's all right too. We've got a bunch of other positions. We've got these two positions that got filled today. If you enjoyed these trades and we're happy about them, if you want to send me a thank you, there's a Venmo right above me. It helps support me, helps support the channel, and I appreciate it very much. But what really helps is if you subscribe and tune in every day. We go live on the West Coast every morning at 7:15 a.m., 10:15 a.m. on the East Coast. Subscribe, tell your friends that are training to tune in as well. Happy Friday. We'll see you all next week.